Alright, what's going on, traders? Welcome back to another video. Today I'll be going over my trades that I took today and some pre-market analysis. Today is January 26th, 2026. So let's get into it. So what you're looking at right here is my pre-market analysis on the SPY with the 1 hour time frame and the 5-day 5-minute. So we're going to be doing some top-down analysis. Taking a look at the SPY 1 hour chart, I had noted in the morning it's trading in a range that it's been trading in for the last couple of sessions. Looking pre-market pushing towards its demand zone of 691. So I'll highlight the 691. 691. As you guys can see, there's rejection. And looking to see if buying stays in control for a possible break and retest, or if sellers step in and take over. Looking to be patient. It's Monday and there's no rush to get into anything unless the market presents itself. And then for the 5-day 5-minute, getting closer into that range, I had highlighted the areas of supply and the areas of demand. And I noted supply 687, and demand zone 691. Pre-market making a strong push up, pull back, and continuation, or push up and complete fail. So these were my two analysis. Knowing that buyers were in control in pre-market session, we were looking to see if it was going to have a continuation, a possible a breakout, a retest, which would be a pullback, and then a continuation to the upside. Or there was another possibility, the likely of it, having a strong push up and then just completely failing, as we can see that it's happened multiple times. So in this area of demand, it's had a huge push down and a huge move to the downside, pretty much a failure of the move of whatever it had made upwards, you see. So it went up, completely failed the move, pushed up, and then completely failed the move back to supply zone. And then right here, you can see it again, pushed up, completely failed to the supply zone again. So what I was looking at was to see if it was going to have a push up and a complete failure, selling was going to step in, or if this was going to be a breakout point for the stock and then a continuation to the upside. Um, so looking at the chart, this is the 1-day chart, and it's trading in an area, as you guys can see, that supply and demand zone, as I noted before. And then today it ended up breaking out. So I want to go over the trades that I took today. We'll have to go to a smaller time frame, and then I'll give you more reason on why I decided to take the trades on what I did. So I was looking at the 1 minute, the 1-day 1 minute. And so as you guys can see, that pre-market push up had a continuation to the upside. You guys can see. And then it started having a parabolic move to the upside, meaning having no push, no pullbacks. So when this had broken out of its pre-market resistance zone, it had made a strong push to the downside and completely got bought up. So this is when I knew buyers were in control in the morning. And then I had a continuation to the upside. So what I was looking at this point was, I was noting that there's a rejection at this 692 level. You see where this area, that white box is. So I decided to give a stab at it and have an entry and then take an entry at this green box that I highlighted with a stop loss at the highs to see if we can see if there was a possible pullback, and if it was gonna have a continuation to at least get a scalp out of this. But what ended up happening, the stock got immediately bought up, and that's when I had got stopped out of my trade. I was able to manage my risk, and I stuck to my plan and got out when I needed to. But in this area, buyers were stepping in, and then they continue to push it up. So what ended up happening here is I gave another stab at it with 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 a stop loss at this high. So it had ended up pushing down because I seen it broke out, and then it was an immediate failure, which is an extremely bearish sign that sellers might be able to push this stock, and the aggressiveness of sellers could possibly outweigh the buyers. So I was looking for a continuation, so I entered this trade and this green box, and I end up getting stopped out as well. At this red box is where I closed my position for a 1 hour loss, and then we came into an area where it started finding more resistance to the upside. This 692.50 area, which I noticed it had came once, twice, tried to break over, 3 times, and then I was looking to enter this trade with a stop loss above these highs once again, looking for a failure of this move, because as you guys can see, when you take a look at it, it's a huge move to the upside, and it should have a breather in most cases. And so I entered this position. I was immediately in the money. It started going good, and I was looking to be patient because at the end of the day, if I'm gonna stick to my stop loss, I need to at least stick to my targets. Because if I'm gonna be risking, let's say $100 per trade, if I don't at least if I end up getting out of this trade before I make at least $100, I gotta at the end of the day I'm risking those $100 per trade. So it wouldn't be a good trade if I took anything less than 100, because that would cause me to lose over a series of trades because I won't be making as much as I'm losing. So I had to let this ride, and I entered immediate push down and then an immediate bought up. Regardless, I would have got stopped out of this trade, but it ended up coming down more. The option premiums moved a little different than the actual stock price. This candle wick came to my break even, because once I came into one to one, once I was making 1 to 1 on my money, I decided to go break even and play conservative and look for a continuation of the downside aggressiveness, and not give any money back. This is what I usually do. This is the plan. When I am in 1-on-1, 1.5 to 1, I am looking to conserve capital. I no longer want this trade to go back to zero. I mean, go back to, my losing, my full risk. I don't want to take on that full risk anymore. So I go to break even. This candle actually was the one that stopped me out on the option premium, like I was stating. It had went higher than the actual stock price, so this one took me out. But as you guys can see, this one would have probably took me out as well. This one probably would have went a little higher, and then it had its move to the downside. But the thing is, the move to the downside, I don't even think on the option premium it wasn't even a good move. Like, the premium wasn't moving as much. The only premiums that were moving for today were the ones on the long side. So I had ended up getting stopped out for a break-even trade. I managed my risk. I managed my risk good on this trade, and I want to give it a little bit explanation on why I kept giving a stab at this. You know, um, as we can see, this is the pre-market session. If we condense this a little bit, we can see our area of support and our area of resistance. Our area of support would be, our area of supply is where buyers, or the amount of supply outweighs the amount of sellers, right? So this is where you get your big moves up. So you get a move where it comes down and buyers buy it up, buyers buy it up, buyers buy it up, buyers buy it up. So this would be an area in which we can say that buyers step in looking to purchase the stock, right? Based off of history. It's not based off of guessing, it's based off of history. And then as we can see over here in this red zone that I highlighted here, this is an area of demand where demand outweighs supply. In this case, sellers being more aggressive than buyers, where there's more selling pressure. So this is where, people are looking to take profits or get out of the trade or short. This is an area where they, aren't willing to purchase the price. Therefore, you know, the stock price having no choice but to come back to an area where buyers are willing to purchase. As you can see, it comes back to this area, come back into this area. So I was playing in the favor of knowing that buyers, this is an area where buyers are willing to buy, sellers are willing to sell, right? In this instance, if I'm looking to purchase, which the first real buying opportunity would be all the way up here on its first real pullback, or if we try to find a, let's say you know a buy, um the first 5 minutes of the trading session, I don't take a trade. But as we can see, if we were to wait on our first area of, support and resistance, we would say this is the first resistance area and this is the first support area. But now this is how much, this is almost $2 above, its initial push up from here. So realistically, if you're getting into this trade, buying it up here, the real support, or its real pullback potential would be all the way down to here, you know, because this is the last area where buyers were willing to buy. This is the next area where buyers are willing to buy. So if you buy it up here, this is very likely to stop out in most cases, because this is already an overextended move. This is a move that made a huge push to the upside, and I wouldn't consider it a good trade. I wouldn't consider this anything to the long side a good trade. Now, if it had in theory, uh, you know, pushed up, created that resistance, and then came back into this area of you know of demand, and then it acted as a support, and then to the upside, that would have been a good move. In my opinion, that would have been a good move, because an area where sellers were willing to sell is now an area where buyers are willing to buy, which makes this an aggressive push up, and then also with confirmation. And we can see an example here. Um, yeah, we can see the example here. This area of resistance, where I tried shorting it, this area of resistance had broke out. It was being resisted, it was being rejected. Buyers stepped in, pushed the stock aggressive, and created a higher level of resistance, or a higher level of demand. It came back and it pulled back into the area in which sellers were originally looking to sell, and now it's an area where buyers are looking to purchase this underlying stock. Which ended up happening was, this would have been more of a high quality trade, because if you're purchasing it here, you know, your 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 stop loss would be at the bottom of this wick, and then your your target would have been, the previous resistance level. So what the point I'm trying to make is that you want to put yourself in the best odds, in the favor of the big money where buyers are buying and sell where sellers are selling, and not necessarily buy where sellers are selling. Because at the end of the day, in most cases, depending on the market, right? When you're purchasing the stock up here, when you're purchasing the stock up here, someone has to sell you those shares. Someone has to sell you those shares, and in many cases, they bought lower. So let's say big money, based off of previous history, big money purchased in this area of supply, big money purchased in the area of supply, because the only ones that are moving the market are big money, people with huge amount of capital. So they purchase in this area, and as you can see, they have a tendency of selling into this area, selling into this area, and then selling into this area. So a buy, like they buy it here, sell it here, and whoever's buying it up here is filling their orders. They're filling their orders, and they're getting out with profits. They're getting out, they're getting out, they're getting out. You're purchasing up here, purchasing throughout these big moves up, and you're filling their orders to the upside. That's what happens in many cases, and then it reverses on you. Then they come back and purchase it, start purchasing. And in this area, as you can see, if we just think it in in like statistics, we came into this area once, twice, three, four, five, 6 times. Came into this area one, two, three, 4 times, and it's only had one breakout. So the amount of supply and demand trades versus breakout and continuation trades is only one day out of these last three trading sessions. So if you were trading supply and demand over the last couple of trading sessions, you would have been profitable. Because the last two, I made money trading this one. I made money trading this session as well. In this session, I gave a stab at it. It broke out. And this is a case where buyers had stepped in and were more aggressive and willing to pay these higher prices. And I was able to manage my risk. I was able to manage my risk and survive another day, another trading day. And one thing I could have done a little better was probably sit on my hands. I think the first two trades were the first trade just probably wasn't the most high probability trade, but I think this trade was a better trade right here. Once we had a real resistance level and then a previous area that was being supported, so it could have been a like a short, a momentary short, looking for a quick scalp. But as you guys can see, none of these shorts had worked today. Buyers are completely in control, and this is something that I'm trying to emphasize is not extremely common. So I gave a try. I tried at it. I managed my risk, and that's the best thing you can do. Now we're able to trade another day. So yeah, I hope you guys enjoyed this. I hope in any way you guys found this valuable, and if you did, please leave a like, comment, and subscribe. And let me know what kind of videos you guys would want to see, or me going into depth more on the strategy that I play, or if you guys want to see entries and exits or whatever. So, thanks for watching.